So welcome to the first recording for the advanced courses in the Elite community. We have some of the team members in here. We've got Barry, Dave, and Sergio. So this is going to, the first set of this course is going to be in a webinar style. As we're going to be discussing with them, you will see the questions and concerns that they ask and how we look at it from there on out. Of course, later on it will be categorized into single videos that I will make it, but first stage is going to be in webinar format. Okay, so you guys ready to get started? Yeah, just want to know if it's live. Okay, yeah, it should be live now. Okay, here we go. So let me pull up my screen and okay, yeah, can you see my circle? Okay, great. Okay, so the thing that I wanted to discuss initially here, because up until the MPA, the 4CB, you guys already have a fair good understanding about what we're looking for in the markets, what's a trend pullback, and all the elements of a trend pullback, because it's not just the last piece that you can trade. You can trade all the pieces of the trend pullback, right? The counter trend of the trend pullback, the whole home run of that, the V formation itself. There's so many elements that can be traded. So now then we come into this advanced part, which comes into the question of, well, which trends work and which trend pullbacks don't work. And that has a lot to do with volume. Okay, that has a lot to do with volume. So if you just take a generic volume indicator and you plot it, so this one I'm pulling up the volume indicator from obviously FXCM, as you see on my chart here. TradingView, just simply if you pull up volume, it will show up, and it shows up on the bottom of your screen like that. Okay, it might look slightly different from mine. You might have different colors. That's okay, because the colors won't really make a difference. Okay, it won't really make a difference. So I'm just gonna give you a brief update on what I'm looking for in the volume and why. Okay. All right, so far so good. You guys with me up until now? Okay, good. Okay, so now what is the importance of volume? Like, why do we even need it? Okay, so volume basically shows us the amount of transactions. So it's the number of transactions. Okay, I'm going to put number of transaction. Boom. Okay, so that's what volume is. It's just the number of transactions. Now, the higher amount of transaction, the more amount of accumulation or distribution happening in the market, which means there's a lot of activity in the market. You will also get a higher amount of volume on during busy hours, like opening of London, opening of New York, and sometimes closing of New York. Okay, definitely closing of London also you get volume because it overlaps with New York. So the volumes will increase around then. So now the question comes of why is it handy and what does it mean? Okay, so the first thing any individual does when they look at a volume is they look at a single candle and they say, okay, so this thing and then this thing, I don't know what that means. Let's just drop it. I don't think volume is important for me. So they'll just look at one little piece and ignore the whole situation. Okay? Because it doesn't make any sense. You have to look at it in this sense. So I'm going to start off with the theoretical, then we'll go into the practical. Okay? So the theoretical part is every trend is generated by a big boy. Correct? So now, since every trend is activated by a big boy, we want to know is when a pullback happens, is the big boy still around? Okay, so that's an important question. What if the big boy has already cashed out and left the building and we see a pullback and we're like, oh, nice pullback, let's try to buy this, right? So wouldn't it be nice to know if they're still around? Okay, so what we're looking for is during the birth of a move, right? After some kind of a consolidation and a break of the move, you start having big boys activating these trades, right? You're getting high volumes on the breakouts, the initiations. So two things we look out for. Two things. First thing is the move of the trend. Okay, so what is the volume of the trend? Okay, and generally this should be rising. Okay, now it doesn't have to be the most significant thing in the sky. It doesn't have to be like, whoa, the volume needs to be all the way up till here, or like, okay, I can see the big boy activated. What we're looking at is the general figure. So for example, this uptrend went from here until there, right? That particular swing. And if we look down for that particular swing, we see volume like that, right? It's like, that's the move it did, right? Increasing, increasing, increasing. It's pretty high up there. Now, what we're trying to do is then compare the pullback volume. The pullback volume needs to be low. Now, what does that mean? Think about it. Why does the pullback volume need to be low? Okay? Why does the pullback volume need to be low? Okay, no sellers. What else? Not many people looking to go against the trend. Okay. Yeah. So basically that's it, right? So the larger player who bought this and the market is going in an uptrend very, very aggressively, he's not done. He didn't cash out. Okay, he's not done. He didn't cash out. That means there is still demand in the market. That's what. If he was cashing out, then during the pullbacks, the volume would be very high as well, which means he's trying to get out. Does that make sense? So this is the reason why we're looking at lower volume for the pullbacks and higher or rising volumes for the trend itself. And this gives you an indication that the buyer is still there and he's hanging on. Okay, if he's hanging on, shouldn't we hang on? Okay, so take a look at some examples. Let's take a look at some examples. Now, if we look at, for example, let's take a look at this section here. Let me clear all this out. Okay, so now I have multiple different time frames. We can choose any time frame you want, whether you're looking at 60, you look at 15 or 3 in this case. You want to start by looking at it from your big boy. I generally look at it on my big boy, and then I work on my trading time frame as well. But I'm also looking at it on all the time frames that I'm dealing with. Okay, now let's have a look at these swings up here. Now remember, the big boy initiates as early as possible, not as late as possible. So it is normal to see your volume slowing down but still rising. So what does that mean? So let's say this is the first swing like that, and then here's the next swing, and then here's the next swing. So your volume can be looking like this. It's pretty steep, and then the decline is like this, and then the next incline, the rise again, is like this. Okay, he doesn't have to be bigger than the last incline. That's normal. It's okay. It happens. And then sometimes, you know, after the pullback again, the incline comes in with high volumes. And that's still okay also. What is more important is what happens at the curve areas. Do we also get high volumes almost challenging the rise? If yes, that's the sign of the big boy now has found a seller. Okay, and business is happening. Okay, so all these buyers who are looking for someone sell it to me has found officially up in this area somewhere to do business with, and they're cashing out, which can eventually make this thing turn like this, make a lower high, come down again, make a lower high, and crash. And that's how counter trends begin. Does that make sense? Now, so now let's understand, why is this important? Why is this knowledge so important about this? Okay, one thing for sure is if you're looking at a trend pullback, this will give you a heads up on if your trend pullback is healthy enough to continue. The other thing is if you're going counter trend, you actually still can take trades in here, and on the next pullback here, all this before the market knows it's a sell. Because once it goes lower and lower, although these are all trend pullbacks, you're probably participating into that trend now that everybody knows about. So you want to get all of your business done early as possible. As early as possible. Does that make sense? But to know that you can do your business early as possible, you need this information. So Barry, you're saying, so this can give us a sign where we can grab a platinum entry. No, not necessarily the platinum entry, because we still need that confirmation, right? Because what we're looking for is the big boy really out or not? So we can't still ignore our normal price action reading. Okay, there's a reason why when we say if the market is going up, an uptrend has a higher high, higher low sequence, right? Okay, higher high, higher low, higher high, higher low. So if this higher high, higher low continues, the uptrend is active. But when he makes what we call a V formation, the higher high, higher low is now challenged, but we don't know if it's real. Okay, we will only know if this is real if anything after. Okay, so how do we know if a V formation is real? Okay, how do we know if a V formation is real? Is this a real V formation? Okay, what if the V formation is like this and he comes from a resistance? Okay, the test. Okay, so because if it does this design, the next thing it can do is this. Can it not? It can do that. Absolutely can do that. So how do we know for sure? How do we know for sure? So what we're looking at in terms of identifying when the turn is officially happening is after your V, you must have chop. If you have chop, then you can say, okay, that's my V. Until you don't have a mess that's contained within this market, you cannot say that was your V. Because the V represents the big boy, and if the big boy has come in, then who dare challenges go above the big boy? Right? Isn't that the basic logic of what a V formation is? It's the big boy jumping back in. Now, where does the big boy jump back in? Who is the big boy? Okay, you always have to look at it in terms of the trend. Okay, we can't just pick any V and saying, oh, that's a V, 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 that's a V. There's V's all over the place. Okay, but what are you looking for the big boy to come back? Okay, so that's how you want to figure out if you're going with the flow gets disturbed, and then after the disturbance of the flow, the V comes back and it's like, okay, the flow has resumed. That's what the big boy, that's what the V represents. It's the resuming of the flow after a disturbance. Does that make sense? So we can't just say that's a V there just because he's going like that, because there was no disturbance, there was no pullback, there was no lower low, lower high, there was no downtrend to mess with that uptrend. Okay, so that's a real disturbance. Like, so when we discuss that, is this let me show you an example. This doesn't mean anything to this uptrend. It's just part of the uptrend. It's just still going up, right? But this does mean something to the uptrend because he's now making lower lows and lower highs. Two pieces, 1 and 2. Two pieces. Okay, so same thing for an uptrend. You need both pieces, higher highs and higher lows. Until then, we don't know if things are in motion or not. Okay, so let's try to understand this in order of sequence. What do we need to keep a lookout first? What do we need to keep a lookout first? Okay, momentum dying, high volume on pullback. Okay. Okay, high volume on pullback means what? Okay, so let's take a look at this example. Can you guys see this chart clearly, or do you want me to zoom in a little bit more? It's small? Okay, let me just take a screenshot again after zooming in. Okay, that should be a little bit better, and maybe I'll make it full screen as well, and then I'll take a screenshot. Okay. That should be better now. Okay. All right, so what this is, okay, let's take a look at all these upward momentums, right? So we got a flow going up from approximately here to here, and if we go all the way down, like somewhere like that, and this one, somewhere like that. So we got a average market flow of what looks like this area here. Okay, this area here. What's more important is along the way that it was going up, our volume was rising, right? We don't need to worry so much about these little peaks that just show up out of nowhere, but we want to see what is the gradual flow. Now, why am I saying gradual flow and don't worry so much about these peaks? Why? Why do I say that? Yeah, very good, Barry. So show steady buying. That's a sign of a larger player. Okay, that's a sign of, although high volume can also mean there's a large player in there, but a large player goes piece by piece. So for example, okay, if you're looking at a player sitting over here, okay, so this is a buyer. He's got 20 million, okay? We'll use a simple number. He's got 20 million. And people who are willing to sell to him is like this. He's got 1 million, he's got 5 million, and then nobody. So what he does is he buys whatever he can, and then the market dips again. Then he buys whatever he can, market dips again. Buys whatever he can, market dips again, until all of these guys run out. If they run out, prices start to go up because he still needs to buy his remaining, 6 is gone. He still needs to buy his remaining 14 million, and he's looking for what's the best price. So somewhere up here, prices will be doing business with him where it will take a small dip and he will buy whatever he can along the way. And once it goes out of balance again and there's no more buyers, it's going to resume looking for, come on, give me, sorry, no more sellers. He's going to say, come on, somebody give me a good price. I'm willing to pay you more. Okay? Until it keeps rising and rising and rising. So slowly it rises and he eats all the orders along the way. And that's what it represents. Now on the pullbacks, the reverse is supposed to happen. So let's take a look at this pullback. It starts from somewhere around here and goes down till somewhere down till here, right? If I take it all the way down, all the way down, all the way down, something like that. Can you tell me the design of this volume here? Is it rising or declining? Yeah. Now, it's still chunky, it's big, but it's on a decline. It's on a decline, which means there's no satisfaction. The big orders are not being filled in. It's just 1 million, 5 million, 2 million. and it's being eaten up by the larger player. So there is no real business happening. Hence, if we go down to the 15 minutes and read this pullback and you do your job properly, that pullback will work. Does that make sense? Okay, so going further into the flow, the market moves up to another swing. It gets up to here. Let's cross it out right there. So this is his high he's put in. Sorry, that's the high. And if I go all the way down, down, seems something like that. Still on a rise. Okay, that's good. Following that pullback right here, it's on a decrease here. That's good. Your pullback is doing okay. This thing can still go in for a buy. Now this time he does a buy. Let me clean all this up so as we get closer to the top so you guys can see it. Okay. Now we still need to use our logic of what we know about price action. Okay, this buyer didn't just start today. He's been at it since down here on this chart, right? He's been going at it for a long time. As he's approaching these highs, okay, he went from here to here and then refreshed the market and then went from basically down here all the way up to here in a single go. There was no basically break in the trend up until now. Everything just kept going higher and higher and higher and higher and higher. Okay, he reaches this point after this high, that marking spot right there. If I go down and I analyze that area, it's here. Now I had a rise in volume on the upward move, but then my selling also had a rise in volume. Almost like they're at the same height. Okay, now that's a concern for us. It means one of two things. Stop the buying, but it also means potentially the next pullback can be for a sell. This whole thing can still pull back, refresh, and go north again. But as of right now, the indication is, hey, the sellers came in hard as well, or the buyer is removing some of his money. So we are facing our first lower high coming up. Okay? Which means if we trade this on the 15, we will be able to take this trade down till here, and that should work. Does that make sense? Okay. Now, there are multiple criteria when it comes to dealing with volumes. Where they are, how much volume is there, and it's never what does this price look like on that particular bar. It's never like that. It is what is this area compared to this area down there. It's the relationship of the chunks. So you have an idea of, let me understand what's going on. Now this holds a lot more value on a lower time frame than it does on a higher time frame. Because on a higher time frame, the session can change. But on a lower time frame, you're still within that same session. So you can clearly see what's the big boy doing in this process. Make sense? Okay, higher time frame, you just need to put together this knowledge with Barry. So why do people say volumes do not work in Forex? Because volume only represents one broker. So if you're looking at volume from, let's say, FX Pro, well, that volume is represented of FX Pro only. So you'll never have an idea of what is the collective volume. Okay? So in this particular case, this is FXCM. It's one of the largest retail brokers out there. Okay, decent enough volume, decent enough transactions. We get a fairly good idea. Okay, it's not perfect, but we're close. Okay, this is as close as you're gonna get to basically tape reading, because that is a very important tool when it comes to stocks. It's old school, but it's very valuable. But in trading, we need to be aware of market activity. How many flickers do we get? How active is the market? And what kind of volume do we have to understand what's the flow in the market? Who's in control? Who's in charge? Can we do a counter trend? Is it safe? Can I continue to do a pullback buy? Is it safe? All of these things can get answered. Okay? So let's start with some questions as of right now, and then we're going to go into some chart examples. And then, the next lesson, we're going to go into some more complex strategies around this. Okay? And this is just the topic of volumes. We haven't even gone into volume and correlation and all that stuff. We have a lot more to discuss there. But so the question is, so Barry is saying, so can we say that the accuracy of volume is based on how good the broker is? Generally, yes. And if you want real accuracy, you can even use the futures volume, but you don't have all your currencies. You only have a limited amount of currencies, because then you can see what is the volume at the exchange itself. Forex doesn't have an exchange, so you'll have to do your best by looking at brokerage volumes. Okay, so the key is also understanding if you have some something that pops up beyond average. So for example, all right, so let's take a look at some examples. Let's do some charts here. Any specific pair that you guys like, or probably traded today, you guys want to see today or yesterday or something like that? Pound Aussie? Alright, let's take a look at Pound Aussie. Let me type that in. Sorry, I have Pound Aussie right here. Alright, so let's take a look at this. Okay, let me take a screenshot. There we go. Okay, let me know when you see the circle and the word Pound Aussie. Yeah, okay. So now we have this market that's in front of us. Okay, initially we're looking at a downtrend coming in. Okay, you'll even see my indications here, which I was trying to buy this morning, but no fill. I didn't get filled in from there. So let's take a look at this. This market goes from an uptrend, rolls over to sideways, and then turns around to go down. Now don't forget, the longer the sideways is going to result in a longer move. The shorter the sideways, the shorter the move. Okay, it's just a matter of how much order building is happening in there. So the longer it is, the lot more order building. Okay, there's a lot more pressure. Okay, so as markets are going down, okay, we're going down, going down. Okay, here we go, somewhere around here to thereabouts. Okay, so that's the flow of the entire move down till there. Okay, rising, 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 starts to taper off a bit. That's okay, that's normal, but there's no pullback yet. Okay, let's take it down further, 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 until, until this guy, sorry, right there, before we start getting a pullback. So up until this stage, every step of the way we see rising volume until here. That's okay. We have a little bit of tapering off, that's fine. Then when the next move begins down here, same thing, rising volume, a little bit of tapering off. And then this last flow, this last three candle chunk of downward movement that made lower lows. Let me clean it up again. So this last chunk of three bars here that made lower lows. If we look down to it, okay, slightly rising volume, and then when the green bars come in, sort of like a V formation, look what happens to them. Look what happens to that volume. It rises really high volume and then starts tapering off a little bit. But it's so much higher and stronger than that volume. That's your first clue of, are we turning around? Are we turning around? is this support resistance real? Does it actually have value? Does this supply and demand have value, or is this just going to be a little boop and then back down again? Okay, so these are your clues that you're getting from the market at that time as it's being developed. Okay, volume does not repaint, you know, compared to normal indicators where it can change based on the next candle. If it's there and it's permanent. It doesn't change. Okay, so that's something to note as well. So as that comes in with the higher volume, the next pullback becomes interesting, just to make sure. These next few bars go down there and you see declining volume. That declining volume means this pullback, if you go into a lower time frame, okay, the 15 or the 3, however you're looking at it, that's going to tell you if you can get some prices that can hold and that can turn back into a buy. Okay? Is it starting to make sense of why these buys work and why it happens? Yeah. So every step of the way, as you see volume is there, it's basically your big boys telling you, hey, they can continue to hold the market, or they're looking to get out. They're looking to get out. Now, some of the things that become interesting is when you have suddenly a very high volume towards the end. Okay, so right now the market is up here, right? The market is up there, so that's 3 candles before, which is right there. Does that look like a very high volume? No. So in this flow from here until this low here, let's take a look at the average volume here. Seems to be like that, and then the last bar puts in this huge amount of volume there. Okay, that's basically when they're trying to get out. You'll see signs like that. When they put in very, very high peak volumes is a sign of, hey, they're trying to get out, they're trying to, you know, remove some positions, counter trends due to come in, etc., etc. If it's normal, buy, pullback, buy is going to resume. If it's not normal and it puts in peak volumes like that, yeah, expect it's trying to put in a bottom or put in a top. Okay, again, this, if it occurs at the beginning, then it means a whole different thing. It means they're trying to initiate. Okay, but if it happens at the end of the trend, it means they're trying to get out. Okay, inversely speaking, at the end of the trend, it also means initiate. Okay. All right. So next question is, so volume can show big whether it's a buy or sell. No, we don't know if it's a buy or sell. All we know is there's transactions. We need to figure it out of what that means. Yeah, so okay, I just understood your question. Yeah, so volume can show whether it's a buy. It can still show high even if it's a buy or a sell. Yeah, absolutely, because it's just a transaction. It doesn't know up or down, so it's still going to show high. Okay. Whether we have that tower of volume, is it correct to assume we were in a downtrend, so increasing volume should ideally mean lower lows, but here with such an abnormally high volume, it failed to make a lower low. In fact, it just stopped. So that could be a pre-first sign. Yes, but you still have to be careful on what bar it comes on, right? So for example, if you see an increase in volume, for example, on, let's take a look at this bar right here. Okay. Now, if you look at this bar, doesn't it look like, hey, it's the last bar in the sky, seems to have a high volume, market wants to turn around, and we have proof of, yeah, that next pullback, he did make lower lows and lower highs. Now what we don't know is if it initiated from here or if the high volume started occurring up here. Okay, so that's the clue to know. But if the high volume occurred on this red bar, yeah, that's a whole different thing. That's a whole different thing. That's topping action. Okay. Barry, I am asking that if the volume indicator is big, it just means there's a lot of transactions at the moment. Yeah, absolutely. Well, that's what it is, right? It's representing activity in the market. And if you're trying to work with the flow of the bigger boy, then you understand what that activity means. Just like we do gauging momentum, we look at all the pullbacks and we're trying to figure out what does a V formation mean, what does a test mean, what does an aggressive V mean, or a lopsided V formation mean. All of this meaning that we're trying to figure out, the volume is the same thing. We're trying to put it together with the meaning, and that gives you the edge. That gives you the edge that you need. Yeah. So this kind of stuff tells you that if you wake up in the morning and you're looking at this as I see a nice downtrend. So this, once he makes a lower low here, that's the guy who started it. That's a breach to the downside. So I need to pull back to do a sell. But once you see these rising volumes coming in, you know that the pullback sell is doomed. That's your first clue of saying, don't do it. Don't do it. Does that make sense? And that's also going to be your first sign of saying you might even possibly have a nice counter trend buy that day. Okay, all you need to look for on a lower time frame is for higher lows to hold the market. Okay, so let's take a look at another example. Any specific pair? New Zealand yen. Let's take a look at that. Okay, here we go. Take a screenshot. Okay, here we are. Let me know if you see New Zealand yen and a circle. Yeah, okay. So, how would you guys classify this? We'll start with you, Barry. I'm going to give you drawing tools. Okay, tell me what you see in this particular chart. From what point? Is this a downtrend for a pullback sell, or is it a buying market? What would you say? Right, because you can read it in both ways, right? It means pullback sell like that, or we can read it as, oh, it's a pullback buy. Okay, yeah, so how would you read this in terms of now what your added assistance from volume? How would you read it? And I gave you a drawing tool so you can use the marker if you want to use it. Okay, I see declining volume on the pullback. Okay. Now, is that a pullback to do a sell again? Okay. Okay, so Who's the big boy? Can you show me the volume of the big boy? Like, can you barricade who the big boy was? Okay, so for example, if we're trying to do this as a sell, that means we're in a downtrend, right? Yeah, so where is the big boy? Whose downtrend are we in? Okay, yeah. Let's take a look at the volume of all of those guys on the bottom. So if you can like box it up, yeah, there you go. There you go. So, okay, so do we see a rising volume? Okay, fantastic. Okay, what about the pullback after your second black line that you drew? That pullback that's begun from your second circle. What about the volume of that? Ah, it got bigger. What does that mean? There you go. There you go. It's basically telling you this pullback is not for selling. Yeah, exactly. Now what's the benefit of this information? Most eyes are looking at this and all they see is a sell. So all the buys that you would do from here are hidden. It's like an illusion. People don't see it yet. The more hidden your trade is, the better chances of it surviving. Okay, so it's a sign of a lot of transactions compared to the downward flow that came in. And that's what it is. Okay, so can this trade eventually get up to here and then go down later? Yeah, that's a possibility. But for now, it's a different story what volume is telling you. Someone bought it down there. Or you can say someone got out big time down there if there was sellers. Okay, so now let's take a look at this now on the 15. Let's take a look at this on the 15. What is that telling us? What is all of this information telling us? I'm going to try to see if we can do it. Let me move this a little bit. Okay, and here's the 15. I'm gonna widen this up a little bit. Scroll it up. Boom, 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 boom. Here we go. I'm gonna take a screenshot now. All right. Let me know when you see the 15 on the left in a bigger size. Yeah. Okay. All right. So, Dave, you want to try to look at this on the first indications of buyers coming in? Where would a possible first buy can be? Yeah. Oh, sorry. Let me give you drawing tools. Here we go. Sergio, you're okay for now, yeah? You're able to follow along? If you're busy or something, just let me know. Okay, cool. Yeah, don't worry, just follow along. I won't give you the drawing or something like that. Just okay. All right, so yeah. Suddenly the volume has increased. Now, and there's your higher highs, okay. There's your first higher low, okay. Lower time frame. Okay. All right, so let's take a look at a couple of things first. Okay. So in this whole downtrend, we get our first signs of whoever was doing this downtrend got somewhere to like this kind of level, right? And then when the pullback comes in, we're starting to challenge that same level with high volume. We're starting to challenge that level with high volume, which puts a scratch in our head. Is like, is my seller done? Or does my seller need a deeper pullback and then he's gonna try again? Okay, whatever the case is, if he needs to pull back again, whether it needs to pull back up until here or resume this entire uptrend, that's for us to figure out based on price action. But for now, they're trying to change the flow. They're trying to change the flow or waiting on the flow. That means if the next pullback holds, that can be our first sign of possibly buying. So now, if we were to look at this as a downtrend on the 15, it's like coming down, pull back, coming down, pull back, coming down, pull back, coming down. V formation. Is that a real V formation? No. Do we have a congestion on the right side of it? No, not a V formation. Okay, so let's fix this V formation issue once and for all. Once and for all. Afterwards, he goes again and he makes a lower low. Pulls back again, lower low. Okay, V formation. Is the V formation done here? Lopsided? Higher low. Okay, here's a higher low. Is the V formation done here yet? Needs a struggle. Okay. Here's your clue. Here's your clue. This is how you guys are going to find out for a solid V formation and a solid test. This downtrend, how do you know it's a downtrend? What's the clue, except the visual clue? What's the clue in terms of what you study? What's the clue of a downtrend? The two pieces. Lower low, lower high. Right? Always, right? Once a V is coming in, it's going to challenge that thing. Okay, which is making, oh, look, that looks like a V. But don't quit on it just yet. Until this structure doesn't break, the test will not come in yet. The V is still going. It's still going. It's still going. The structure finally breaks into lower high, lower low, into a downtrend, and our V just ended. Just now. For the very first time. So your V is actually like that. It's that big. Okay, we can't just call it and saying, well, that's a V there in mid-air. You have to follow through with it completely. Once that happens, how do you know what is test one? It's the same process. It's the same process. You need a downtrend for test number one. How many tests do we normally have in a trend? Yeah, generally 2. Our objective, what's our objective? If we do want to buy this, what is our objective? What's the goal? Get the best price. Very good. Get the best price. Dave, buy on test 2 till recent high. Yeah. The goal is low as possible. Okay? Away from landmines. Low as possible. Come on, baby. Give me the best price. That's the goal. So what we're looking at is, here comes test 1. Lower high. Nothing here yet. Lower high. Lower low. Check. Downtrend has begun. Test is still going, still going, still going. Test 1 complete. Until this thing still goes, still goes, still goes, we don't have a test 2 yet. It is only afterwards, when this thing breaks, test 2 will begin. Yeah, once test 2 is finished, that's when your buys will begin, and we will try to take it up to new highs or recent highs. Okay? But if everything goes according to plan, you should be able to challenge to these recent highs up there or that recent high up there. Make sense? So all of the stuff before even getting to this stage is you're trying to watch it as closely as possible from the information that you get from the volume ahead of time. Okay, the money is in the timing, and the sooner you answer the timing problem, then it's just a matter of skills on, okay, what is the price that you can grab. You know, just remember, it's not a competition, but it is nice to grab decent prices, and you want to make the most out of it, but in a repeatable way. The objective is always, can you repeat it over and over again, not how many pips can you get out of it, because the pips don't really matter, right? What matters is how much money you make today, and again tomorrow, and again the next day, and again the next day, and then even if it's 1 hour or half hour or 10 hours every day, that's what's going to make you happy. That's what's going to make you happy, because you're getting progress. Okay, so the question here is, so can we use the volume for test phases, and do we use a smaller time frame from that? Yes, absolutely. Absolutely, you can do that. So what do you think happens on the smaller time frame during the test phase? Now, can you tell me what's happening right now in the test phase right now? What's happening? Losing volume. Is that because we're in a pullback mode? The answer is yes and no. It's yes because we're in a pullback mode. No, because the volume can also be tricking you, because right now there's no activity in the market. That's why there's low volume. So you need to be careful of that. Sometimes low volume doesn't mean it's low because it's a pullback. It can mean it's low because there's no one there. Does that make sense? So you really need to analyze all sorts of situations when dealing with volumes. Yeah, dead hours. Why is it moving? How much of a pullback did he do? Why is there a big spike? Was there a news? Was there not a news? You know, there's a big spike, but my market didn't go anywhere. That's also a clue. Okay? If you see a big green candle with a very high volume, like for example this one, and you have a very high volume like this, but then the very next candle you have a red bar come in like that, like a railroad track, that means that high volume that went up got completely consumed by the sellers. It's a seller's market, so a pullback would be for a sell after that. So you still need to use logic around that volume piece of information. Okay, because normally it would look like, oh, well, high volume, rising on an uptrend, any pullback is for buying. But in that particular case, because it got eaten so quickly, it means sellers are trying to take control of it, and or the buyer got out. Yeah, this is a very good tool for beginning of a session. But anyways, all of our trades happen during beginning of sessions anyways. How many times do you see a trade that works in odd hours of the day? Very rare, very, very rare. It's always around market open. Either market open, so think about these things. London open, London close because it overlaps with New York, and then New York open until New York lunch, and then your day is over. That's it, you're done. Okay, so these are your trading hours, and in these trading hours you'll have activity in the market, and you need activity from the larger player to help you move your trades. All right, so far so good on this particular example. Makes sense? Yeah, okay. Cool. Shall we do another one? Yeah, well, let's do another one. Pair? Any pair? We just came from USD, and that was the last one we just did. Any other one? New Zealand USD and Euro USD. Okay, so let's do Euro USD since we're already in the New Zealand group. It's going to look very similar. Let's do Euro USD. Okay, let me clean up these lines and let's take a look. Okay, I'm going to take a screenshot and let me move this a little bit higher so you guys can see the volume. Okay. Okay, let me know when you can see the Euro USD and my circle. Yeah, okay. All right, Sergio, are you free? Do you want to try this one? Should I give you drawing tools? Okay, I'm gonna give you the markers. It's gonna be on your left side of your screen. The second icon is your marker on the left side. Okay, so just on the Euro USD 60-minute chart, this one, just let me know for the situation. At what point did these sellers lose the ball? At what point did the sellers stop saying pull back, sell, pull back, sell? When would you have known? Okay. Okay. All right. So where was the first clue of when the seller switched? Okay. Now, these are normal volumes. Now take a look. So it started off pretty strong, right? However, it wasn't inclining. Okay, it's a good try. It's a good try. So there's various types of volume that you're gonna see. There's various types of volume. So now, when you have this volume, and if I say compare, let me clean this up and we redraw it here. So that area to that area, right? So when we have these volumes from this area, and then it starts to decline, and then the pullback here is this area right there. Now, is this in any way a challenge to that? No. Let's also monitor time of day. This is around 6 a.m. Bangkok time, which is 6 p.m. US time. Okay. So do you understand now why there is a dying market right there? There's no volume in the market. It's after hours right there. So again, you have to be very careful with that. Sometimes it can trick you like that. You have to be careful. So afterwards, when the sellers come in again, we have lower volume for both the sells and that buy, lower volume. And then we have the move down. At around this time is noon. Okay, and then around 1 or 2 p.m. the market starts to move down. Now 2 p.m. is around Frankfurt. 1 p.m., 2 p.m. is around Frankfurt. It's starting to open now on Bangkok time. So markets start to move, volume starts to increase, and everything looks healthy. Okay, volume starts to increase, everything looks healthy. Can we do this pullback for a sell? Is it easy to read the volume here on the 60 for this one? Okay. Where do you think that is on the 15? Any of you guys have all drawing tools. On the 15, where do you think that spot is on the 15? Nope, it's not that area. Nope, not that area. Yeah, it's that spot right there. Yeah, very good. That's the spot. Okay, can you read the pullback there? Is there a way for you to read the pullback in terms of legs and this and that? Okay, no, what I mean by is we can't see the pullback clearly on the 60. We just have one bar, right? We have one bar, and that bar doesn't have high volume or anything, but it's just, it's lower, but we don't know if that's clear enough. But on the 15, we'll have a few more bars at least. Okay, so it's this spot right here on the 15. Goes down to it's this whole area here, because I can see a big tail in there too right there. Okay, so it's that whole spot right there. So it's this piece coming down and then turning green when it comes up till there. Okay, so all of that in terms of volume. Yeah, there you go. So volume here on the reds, okay, they are increasing, that's fine. But on the red, on the pullbacks, they're neutral, and then just the last bar rises. Now, is that a bad sign, the last bar rising? Now we're getting into the little bit complex stuff of the details. Okay, it went up very quickly to turn around very quickly. Okay, so that's okay. That's okay. That's okay. It doesn't mean the pullback is for a buy. Okay, everything still looks in orderly fashion. Yeah. Still early. Yeah. Okay. Let me go back out and make this a little bit higher. 1 second here. Okay. Barry, so the question is, but then that big green candle makes a V formation and we can see a spike in volume. Yeah, yeah. Over there, we do see a spike in volume, but over there we can also see it on our 60. We do have a rise in volume starting to come up. We do have a rise in volume. Yeah, exactly. Exactly. Okay, so what we're trying to find out is at what point do we get that information? Do we get any clue from here, or is this the first sign of, hey, that's the markets are trying to turn around? Yeah, the first one is a little bit jaded, but the second one looks a little bit more confirmed, doesn't it? Now, the second one, now that it's more confirmed, also comes with your price action assisting you by saying what? V formation and higher low. So higher low means what? That means your V formation is not the one you're thinking. It's the one before. So your V formation is this guy. Your V just ended right there. Because since that V, the buyers, the sellers didn't go lower, and it was all range. Okay, so where do we have test 1? What is test 1? This is test 1, coming down, pulling back, coming down, boom, ended. Test 1 finished. Test 2. Now, if test 1 is lopsided like this, your test 2 is not going to come back down till this area here. So the objective, we don't expect test 2 to come back that far. Exactly. It won't come back down that far because your test 1 performed so strongly. So generally, if you are able to grab test 1s, if they give you a good price. Now, how do we know first that this is the V? At what point do we know that this was the V? When do we know that? Do we know that on this red candle? No, too early to tell. Do we know that on this green candle? No. What about this red candle? Okay, what about this red candle? Okay, it is only when your V finishes, so for example, this V finishes right there, right? So that we can say, okay, the V was like that, we can see it. He just finished. Once it finishes, what you need is some kind of struggle. If you get a lower high, lower high, lower low sequence that doesn't perform, those are your cleanest ones that you can say, okay, come on, give me a better price. If you get a better price and you're able to grab it, and if that goes up slowly, you can be sure your test 2 is going to try to come lower than that. But if that goes up smooth and clean, your test 2 is going to come up in that area before taking off again. Sort of like a lopsided V formation, you know, just depending on the way you look at it. Make sense? Okay, so this little thing right here can be your first indication, but for me, I would personally say that's still too early to really say. I don't know. But having to see all of this stuff hold after that can be your added confirmation that, hey, you know what? Let me just buy this one. And that's like your absolute first push. And then this one would be your secondary push. And then maybe you can buy a third push, because anything after that is now too late, too late, too late, too late. Look for something brand new. There's no need to waste any more time on this. It's finished. Make sense? Because now, even if it's finished, what it can do, even if the big boy still wants to buy, he has to now refresh completely like this before going back up. So that means you're no longer trading that 15-minute time frame anymore. It has now turned into something else, which means it's not gonna take the same amount of time to set up. Okay, but trying to get that first one is very hard because it could still go down after that last big candle. Yeah, but you see, here's the clue. I'll show you. How do you know if that last candle is correct or not? How do we know? This red candle right here. Okay, let me take a screenshot of this. Okay, so Dave, two clues. It came down in two pieces, so sellers are weak. Second, it stopped and didn't make a lower low, so it's a trap. Yeah, there you go. So, two pieces to come down, but he didn't even really come down. He just rolled back over. He rolled back over. Now let's take a look at this now. One more time frame lower for precision. For precision, which means this is that spot here. Here's that first whole set that came down. And then your second leg that came down is this piece. Here also you came down, struggled, then full speed coming down, which then immediately turned up on the first green bar that went back inside like a range. He goes right back up there. Imagine if you're reading this like a V formation. What happens if that is your V formation? You have your sideways congestion there holding above that range, telling you buy it, buy it, buy it, buy it. Okay. Yeah, well, see, the thing is, if you buy it at the break of, for example, this resistance here, you're buying at landmine area, so you want to be very careful with that. Okay, the goal is to buy it as low as possible so you are able to see if it doesn't make it up there, I'm out. Oh, okay, if you're looking at this resistance, then yeah. But you need to know when to come down to the 3 minute to look at this. You do it too early, then you're gonna end up buying this thing, because look how strong that goes up. It can be tempting, like, oh my god, it's right now. Right? That catches me off guard many times also, thinking, like, seeing strong red green bars come up, like, oh, is this the moment? And then later to figure out, oh, he's got another push down coming. Okay. Dave, yes, but there we have only one piece in the 15. Exactly. So that's why you have to be very, very careful of, you only come down to the 3 once you're almost certain that this is your moment to buy it. What else tells you a clue that this is your moment to buy it? Now, what was this trend initially on the 15? What was the trend? Uptrend or downtrend? Downtrend. So isn't your downtrend supposed to have increasing volume? So if these are pullbacks, and then your cells are supposed to activate for a V formation, or your cells are supposed to activate from your test after your V formation, the volume just keeps decreasing. Okay? If you cut out all the spikes and then you just take a focus on the movements, it's ever so decreasing, or not increasing, if you want to put it that way. That means that's trying to, it's acting like a pullback. Okay? So if you put together all these pieces of information, things will get a little bit better. Okay, because now we're looking at more reasons to filter out your trade to find out, hey, just because I see a trend pullback doesn't mean I have to trade it, even though it looks perfect. 1 leg down, 2 leg down, 3 legs down, V formation, test, buy. Too late. It's not going to work. Because volume is telling you the big boy is not even there. Or he doesn't support the buy. Okay, so let's leave it at what it is for now, because tomorrow we're going to be touching base on how do we use this information for understanding what is the perfect counter trend. Okay, and then we'll take it from there. We'll go into that. We'll go into counter trend, and then the next day we'll do correlation and stuff like that. So try to look at these on your charts, practice it. I know those who are watching the recording are really going to benefit from this as well. All right, guys. So that's all for this lesson. I'm going to stop the recording right here, and we will begin the next lesson tomorrow or day after tomorrow. Yeah. All right, guys. Thanks. Cheers.